Hello and welcome to Dialogue. On Wednesday, U.S. President Joe Biden unveiled the first part of what he calls the American Jobs Plan, that is an infrastructure package worth more than $2 trillion US. It is called Once in a Generation Investment in America. The proposal will give the government a bigger role in the U.S. economy as it tries to spur a comeback from the devastation caused by the COVID-19 pandemic. Will Joe Biden introduce more legislation to tackle controversial issues? And how is competition with China, which is portrayed as America's major rival, been used by Biden to try to promote American action? To discuss all these questions, I'm joined by Rick Dunham, former White House correspondent for Business Week, Wang Dan, chief economist of Hang Seng Bank China, and by Steve Keen, a crowd-funded professor of economics on Patreon. That is our topic. I'm Wang Guan. Rick, President Joe Biden laid out the details of the first part of this, $2 trillion infrastructure package. We all know about America's aging infrastructure. Do you think Biden's plan is a step in the right direction?
Well, for infrastructure, it definitely is. The interesting thing is the infrastructure part of this package is not the largest part. It is more than $600 billion, which is a large investment in roads, bridges, public transportation, and especially electric vehicles. But there are many other parts of it that are even larger that have to do with housing, with improving neighborhoods with lead pipes and fixing that up, and then in areas like care for the elderly, you just see major shifts in America's priority. Probably the biggest shift since Lyndon Johnson in the 1960s war on poverty in terms of government involvement in the American economy and working to try to help the poorer people in the United States.
Professor Keen, what do you think? Do you think this is an effort by Biden and his administration to address some of the most salient problems America faces today?
Yeah, I think it's a good proposal, and it's more substantial than many critics of Biden on the left were imagining he might do. So what he's doing by this is both creating the money that is needed to build that infrastructure and then building the infrastructure. And if anybody who's spent any time in America in the last 20 years, you'd be quite aware of how run down most of that infrastructure is. It's no wonder it's losing the race against China, which is in a nation-building phase. America, in many ways, has been in a nation-demolishing phase by worrying more about its government debt than it worries about its physical assets.
Wang Dan, in Shanghai, from the perspective of an economist like yourself, does Joe Biden's plan make sense? What do you think of it?
I think this is the infrastructure building plan and the housing building plan that America very much needed. And its transport system especially needs to be lifted. And actually, if possible, it should be done very quickly. But then when it comes to the actual execution of the plan, I do find it hard to be too confident on the final scale of the plan, because there are a lot of the so-called green stuff related with climate change that maybe the Congress, especially the Republicans, don't feel comfortable about. And then when it comes to the central-local government relations, it just doesn't look like in the previous stimulus plan when it came to infrastructure, it was spent in an efficient way. So this time, I think the American people need this plan, but to become successful, Biden has a lot of challenges.
A lot of challenges indeed. Mitch McConnell, the leading figure in the Senate from the GOP side, said that he will be opposing this plan throughout its process. Rick, there are labels of big government. Whenever Democrats or people on the left try to bring up plans like this, will Republicans get behind the proposal this time around?
I think there's zero chance that Republicans will get behind it, if for no other reason than the tax increases on corporations and the taxes on companies that offshore jobs that make profits by sending American jobs overseas. So I think that that will eliminate Republican support. If it had been just the infrastructure part, just the roads and bridges, I think you might have seen it. At least you might have seen 5 or 10 Republicans. But I think 1 or 2 and probably 0 is what you're going to get. So the key is that you need all 50 Democrats in the United States Senate, and you need all the House House Democrats. The Democrats can only lose 2 or 3 people in the House of their members if they're going to pass it. So the question is, how do you build a plan that unites all the Democrats, that keeps all the Democrats in line? And Democrats historically have been accused, as you said, of big government. This is obviously big government, but what Joe Biden sees is that each of the elements in this package are popular. And so what he wants to do is sell each element and say, which do you oppose? And he wants to put the Republicans on the side of the big corporations and the rich. And that's a political calculation. So he's just trying to shift the risk to the Republicans, the political risk from the Democrats.
Professor Keane, do you think Joe Biden can get enough support from the Republican side? And if not, what kind of horse trading will there be in the Congress? And will he push forward this proposal like his predecessor did through executive actions, perhaps?
Well, that's always the fallback, but of course that he makes it rather temporary, though of course if you do it at the beginning of your term, you have 3 years to carry it out. So he may well fall back on an executive action. But the point about the Republicans, no Republicans voting for it, this is normal. The Republicans attack the Democrats for not being bipartisan, as they put it in America, when the Democrats are in power. And Republicans are in power, they ride tidily over the top of the Democrats anyway. So I've got a feeling that Biden is quite aware of that, given his extensive experience in Washington, and he will do it whatever way is necessary.
Well, Wang Dan, we know that coupled with this 1.9 trillion coronavirus relief package, Joe Biden's infrastructure and housing initiative would give the federal government a bigger role in the U.S. economy than previously. Some estimates put government spending at 20% of its entire economic output. What impact would the increased proportion of the government spending have on various economic indicators of the U.S.?
When it comes to the 1.9 trillion stimulus plan, it was mostly on consumption. So that package would lift the U.S. economy, especially the consumption part, throughout the third quarter this year. But since it's a short-term plan, people get the money and the people will spend it very quickly. So it won't have many of the long-lasting impact as the second proposal that Biden has. And Biden now and his team now understands fairly well that nothing lifts the economic growth as well as infrastructure spending. And China is a very good example of that. Once you're spending enough on building roads, building railways, then the midterm, 5 to 10 years economic growth would have some foundations. But it would add immediate pressure on government debt for sure. Right now, the U.S. doesn't have much to concern since the borrowing cost is so low. But as soon as the federal government issue a lot of debt, finally those debts will be bought off. A lot of those debts will be bought off by the Federal Reserve. And that means probably the U.S. would have to print a lot more money, and that might drive up the inflation in the future, and that could be very concerning.
Yeah, it could be very concerning. We'll talk about the inflation. Actually, many economists expressed similar concerns. But let's talk about how to pay for this plan in the first place. Rick, let me go back to you. To fund this spending, the corporate tax rate, as we know, would be raised from the current 21% to 28%. The Biden people said the plan would also change the tax code to close loopholes that allowed companies to move profits overseas. Do you think these plans, proposals will actually happen?
I think there's a pretty good chance that most of it will happen. What you have to remember is that although Joe Biden would increase the corporate tax rate over where it is now, it still would be below what it was before Donald Trump became president and passed the huge corporate tax cut. I think that some of those, the closing of loopholes probably would have enough support to make it through. Around the edges, it's possible the tax increase will be lower. The problem is you don't have anything to gain from Republicans by compromising on taxes, because none of the Republicans are going to vote with it. So the question is the few moderate Democrats, either 3 or 4 Democrats and Independent Angus King of Maine, who may say these tax increases are too high. In the end, what the Congress is going to have to decide, what the Democrats are going to have to decide is, do we fund this through debt or do we fund this through tax increases? And the tax increases, you have to remember, in this Biden plan, take 15 years of tax collection to pay for 8 years worth of infrastructure. So it's not even balancing in the short term there.
Yeah, but obviously some people have different points of view. For example, Ralph Nader said this, and I'm going to show you if we can. Ralph Nader, one of the friends on Twitter, said Biden's touted 2.3 trillion infrastructure over 8 years is trivial. It comes down to less than 300 billion a year for a 21 trillion economy. He even refused to take the corporate tax rate back to 35% as under Obama. Just proposed 28%. Democrats going small again. Wow. Professor King, do you agree?
Yes, I do agree, and this is one of these issues about how you actually measure government debt and what government debt actually is. You would have heard of modern monetary theory. I'm working on a major book on this issue right now, and it is categorically the case that when the government creates debt, that is what creates the money that enables it to spend into the economy, and fundamentally, its debt is owed to itself. So the government, for example, we go back to the Second World War. How was that paid for? If you believe the government had to borrow from the private sector to fund the Second World War, then it had to borrow 70% of GDP, because that was the accumulated level of debt through the Second World War. It did borrow zero. The money it created, which was equivalent to 70% of GDP, boosted the American economy and let it defeat the Nazis. And then in the aftermath, the debt was 110% of GDP. According to conventional economic theory, that would drastically burden the subsequent generation. Who were the subsequent generation? The baby boomers, the most spoiled generation in the history of humanity. So the way we think about this is quite wrong, and you have to regard the government as a money creator, which funds itself, and with the record of its money creation is what we call government debt. But it is in no sense equivalent to the debt you and I might get into if we borrowed money from a bank.
Well, Wang Dan, do you agree?
Well, when it comes to the modern monetary theory, I have very mixed feelings because 2 years ago when I first heard of it, I thought it didn't make any sense because that's basically what Democrats always wanted. They don't need to raise taxes, just let the Federal Reserve print money and every problem is solved. But now, after the crisis, I start to have some empathy over the theory because when we're in such a low interest environment, borrowing cost is so low. And if those money are used to finance productive projects like infrastructure, that can drive the economy to grow a lot faster. So when the economy grows faster than that growth, that means the debt would be a smaller proportion of the GDP, and eventually it can absorb into the economy and can be digested in some way. But when it comes to the crowding out of the private investment, I think this is still a problem. Because when the government is big, it spends a lot of money. That means it creates a smaller room for private sector to engage, and that in the long term can hurt market efficiency. But since now we're in a crisis mode and the economy needs to get back to its historical trend very quickly, then public spending needs to step up, and that's why I'm sympathetic over the theory right now.
Yeah, we'll really see how it plays out, not over the past, the future, the next few months, but years rather. Another issue, inflation. Both the White House and the Federal Reserve said there's no such thing. We shouldn't, or at least we shouldn't worry about it now. But some people disagree, including former U.S. Secretary of Treasury Larry Summers expressing fear of a 1970s-like hyperinflation. Is that something we should worry about, Rick?
It's something that we should think about, and it is a possibility. We just don't know. I mean, the problem is if all you're doing is printing money, if the debt is so large that then you decide you have to pay it off, then you definitely could have a problem with inflation. I mean, if the idea is to use inflated dollars to pay down huge investments, yes, that could be a problem. But I tend to agree with our colleagues here that it's probably if the money is being used for useful purposes like infrastructure, which tend to grow the economy, as China has seen over the past decade, I think that makes a big difference. And if some of it is paid for by tax increases that don't hurt production. So I think that it's a risk. It's a risk that we have to assess and watch. But I think it's overstated as a problem. I think Republicans, when Democrats are in charge, worry about deficits being inflationary, and when Republicans are in charge, they just say, go ahead and do it for our priorities. So I think some of it is political. On the economics point of view, I think we have to watch it, but we can't let it stop us from acting, because there's just such a need for infrastructure improvement. There's such a need for green energy, for electric cars, for other investments that modernize America and move it up from number 19 in the world in infrastructure.
Certainly, so many issues have been politicized. That's why we need to hear from experts like yourself, as well as economists. Professor Keene, should we worry about the risk of inflation?
Well, I think there's going to be inflation in the future, but caused more by the impact of declining productive capacity courtesy of climate change than anything else. And in the context of the huge levels of private debt we're carrying, which is the real concern for economies. For government debt, frankly, when government debt's issued in the currency of the issuing nation, government debt is irrelevant. But private debt matters very greatly. And we're still carrying enormous levels of private debt after the global financial crisis back in 2007 to 2010. So if you have a boost in consumer prices in that situation, then very rapidly consumers will be unable to pay. You'll have an inflationary boost followed by a collapse. And I think that's far more of a worry. So if you want to do something about the level of debt, what we should be doing is finding ways to reduce private debt so that we don't fall into a debt deflationary trap after the coronavirus crisis itself is over.
Right. Well, on that, I want to shift gears a little bit and talk about China and China's role, like it or not, in Biden's plan. Joe Biden said the initiative of his will put the U.S. in a position to win the global competition with China. Will talk of competition with China dominate Biden's China policy? I mean, do you foresee the fact that China will still be used by Biden as a part of his pitch to the American public to sell his infrastructure plan?
I don't think China would be nearly a central issue as when we were still back in the Trump era. But Biden's approach is not a surprise to me. Last year, when he was still a presidential candidate, he wrote an article for Foreign Affairs with the title, "Why America Must Lead Again." So in that article, he mentioned China 14 times, and 13 times are in negative tones when it comes to competition, and only once when he mentioned China in a neutral tone, and that's when he talked about the climate change collaboration. So I can see that in the future, the issues between China and the US can be divided into different categories, like what the Alaska meeting had been talking about. So there are issues that China and the US can collaborate, like climate change, new energy, new material. And there are issues that two sides are much in need of more or further negotiation, like trade. And there are issues that two sides are basically in outright competition. That's when it comes to Belt and Road Initiative, investment in Africa, or investment in ASEAN. So we can see that those issues can very much be divided, and politics and economics are two different issues. So I don't think China would be a central problem to the Biden administration, but diplomatically, it will be quite important. But for Biden, if he wants to get re-elected, he can't win a second time by bashing China. He will need to address the domestic issues first, like the racial injustice, the economic recovery, and especially when it comes to economic recovery, he also needs China's help.
Yeah, there are many hopes and speculation that the two sides may actually compartmentalize this relationship, if you will. Rick, Biden said he will release the second part of his recovery package in a few weeks. What areas do you think will be targeted in the second round of proposal, and how big will it be?
Well, I think the next one goes to health and education. I think you're going to see healthcare improvements. You're going to see educational reforms. You're going to see social welfare programs. I mean, with the amount of spending in this, I would be surprised if the next package were more than $1 trillion. Now, $1 trillion is a lot of money. If you remember, the Obama plan back in 2009 was just under $1 trillion, and now we're talking about that as the third largest package of the first year of the Biden administration. So I think we have two things to look at in the next month. He will have this big package of social spending, and then he will have his budget proposal. And his budget proposal will basically be to realign priorities in spending toward middle class, toward underserved communities. He's promised over and over again to deal with some of the institutional racism in America. And I think you're going to see that in all three of these proposals: the current stimulus, the current infrastructure plan, the next one on social spending, and the budget priorities.
Well, Professor Keene, the American Jobs Plan emphasizes revitalizing manufacturing, securing U.S. supply chains, and investing in R&D. Do you think America's manufacturing industry will be, boosted because of this plan?
Well, hopefully it will be. I mean, America has drastically run down its manufacturing sector over the last 40 years. That was really American corporations taking advantage of low wages in China, and of course China taking advantage of the greed of American capitalists to create your own capitalist class and industrialize quite dramatically. So that's one case where China was far more intelligent at the collective level than America was. And I think America is now looking at that and saying, well, we have to build ourselves back up again, and they certainly do. So a lot can be done, but of course you won't bring back onshore jobs that went sent offshore 40 years ago, because the technology has so drastically changed the need for labor. But the manufacturing and the skill level, America definitely needs to rebuild itself.
Well, Wanda, I'm curious about the global impact, really, if this plan does, go through the Congress. What kind of impact do you foresee, Biden's infrastructure and economy plan will have on the global economy?
There will be spillover effect for sure for most exporters. So the U.S. needs to import a lot of raw materials and industrial intermediate goods, and China is one major producer, and China would benefit from this plan as well. But when it comes to investment, there is not much chance for China, but there will be a lot of chances for the U.S. allies in Europe and also countries like Australia. Because since 2018, China's investment in the U.S. are closely scrutinized. And for many of the infrastructure projects, for example, China no longer can participate in the bidding process. So I think the overall impact to the global economy is positive, but when it comes to the emerging markets, the developing economies, it's not all rosy. Another negative impact is that this plan might drive the U.S. economy to grow a lot faster than the market expected, and that can make the U.S. dollar quite strong. And it can create this driver for capital to flow out of the emerging market and cause them to have a bigger debt problem. And it can be very hard to resolve in the future.
Yeah, this is something we should definitely keep an eye on. Rick, Biden is, as we speak, halfway through his first 100 days in office, which is a benchmark, a milestone date of gauging the success or failures of the U.S. president. How do you think he has fared so far, especially when it comes to his legislative and the executive agendas?
I think he's done as well as or better than anyone could have predicted. I mean, to pass the $1.9 trillion plan, and to even though it wasn't pretty, he got it done. All of these executive actions that he has reversed Donald Trump policies, the fact that he's prioritizing and moving on, I think is remarkable when you compare it to previous Democratic presidents. I mean, Carter, Clinton, and Obama all had bumps in their first 100 days. The only challenge that Biden really has had where he is unpopular is the issues at the border with the surge in immigrants who had been blocked during the Trump years. So I think that's his challenge. But if you look at all these elements that he has adopted as president, almost everything polls positively for him. The American people, a majority of American people, support his actions. So I think that it's been a very good time and probably the most action of any new administration, new Democratic administration since Lyndon Johnson's first 100 days.
Professor Keane, from the point of view of an economist, how would you rate Joe Biden's performance in the first 50 days?
Well, a similar rating to Rick. He's done a lot of things that people thought he'd be cautious about. And for example, the scale of the reconstruction program, that is something which was beyond what I think expectations were from progressive Democrats. He's done more than people thought he would do. And I've got a feeling this might be even, in fact, due to his age, because and how many years he's been around. He knows he hasn't got long. Obama, on the other hand, thought he was building a legacy and was very cautious in the middle of quite a serious crisis. Biden's come out the other side and been quite activist. So I think it's been a remarkably positive experience for him. And of course, I think people are simply enjoying the relief of not having to worry about presidential tweets on an hourly basis.
Yeah. Lots of American friends of mine told me they got the $1,400 check, $2,800 if you have a kid. Wang Dan, how would you rate Biden's performance?
The most impressive thing to me is that he actually got the $1.9 trillion bill passed, because even after the financial crisis in 2008-2009, Obama couldn't get through a stimulus plan nearly as big as that. So Biden's action has sent a lot of the Keynesian style of economists into ecstatic mode, because as economists, we all know, in a crisis, during a crisis, if you want to get the economy back on track, you need a big plan. And the stimulus can only be bigger. Too much of a good thing is wonderful. It should be the principle here. But in the last crisis, the U.S. didn't do that. And this time, it actually, by doing this, has become the engine of the global recovery. So I think Biden deserves a lot of credit for that.
All right, we'll have to leave the discussions there. That's all the time we have. Wang Dan, thank you as always. Professor Keane, thank you for coming to Dialogue. And Rick, come back again. Thank you also very much. And that will do it for this edition of Dialogue. I'm Wang Guan in Beijing. Thank you for watching.